Hey everyone, and welcome back to Talk Tickers. We're going to be taking a deep dive into Affirm's Q2 2025 earnings call today.
It's going to be a fascinating one for sure. Affirm is showing some impressive growth, especially in their active customers, which are up 23% year over year.
Wow.
That's 4 straight quarters of acceleration.
It's like they're defying gravity in this economy.
Right.
Their gross merchandise volume, the GMV, also hit a whopping $5.5 billion.
Yeah.
Those 0% APR loans seem to be a hit with consumers.
They are indeed. But what's intriguing is how Affirm is managing that growth while keeping a close eye on credit risk.
Yeah.
It's a delicate balance, especially when you're making it easier for people to borrow.
Yeah, you're right. It's not just about attracting users.
Right.
It's about sustainable growth.
Absolutely.
Speaking of which, their revenue less transaction costs, the RLTC, came in higher than expected.
Yeah.
Exceeding their projected range.
Yeah, they did.
You'd think they'd be popping champagne, right?
Well, they're actually reinvesting those profits back into the business, particularly into those 0% APR loans. It might seem counterintuitive, but it speaks volumes about their long-term vision.
So they're playing the long game instead of chasing short-term gains.
Yeah.
But how are they managing the potential risks of offering more 0% loans?
Right.
After all, no interest means less revenue for a firm.
Well, that's where their credit risk management really shines.
Okay.
They're incredibly selective about who qualifies for these loans.
Interesting.
Plus, they've structured the program so that merchants sometimes share the cost, making those 0% APRs possible. It's a clever strategy that benefits everyone involved.
Okay, so it's like a win-win-win for a firm.
Right.
The merchants and the consumers.
Yeah, exactly.
But what about their overall funding costs?
Right.
Aren't those going up because of the economic uncertainty?
Surprisingly, their funding costs are actually improving.
Really?
Yeah, it's probably a combination of their stellar credit performance and favorable market conditions. They're even securing big wins, like that forward flow agreement with 6th Street.
Ah, yes, that partnership. It seems like a huge vote of confidence from investors.
Absolutely.
But they're being cautious and rolling it out gradually, right?
Exactly. They're not rushing into anything.
Right.
They understand that sustainable growth requires a measured approach,
Makes sense.
especially when it comes to financing.
So we've got strong growth, smart risk management, and favorable funding costs.
Yeah.
But let's talk about international expansion.
Okay.
What's the latest on that front? I know they've been eyeing the UK market.
They're making significant strides there.
Okay.
They've already partnered with dozens of merchants and are seeing strong demand for their longer-term loan options. It seems like the UK is really hungry for flexible financing alternatives.
So they're filling a gap in the market.
Yeah.
Clever. And their partnership with Shopify is a big deal, right?
Huge.
That gives them a massive boost in the UK e-commerce space.
Absolutely. Shopify is a powerhouse. And that partnership could be a game changer for Affirm's UK expansion. It's clear they're not just dipping their toes in the water.
Right.
They're diving right in.
Yeah, with a strategic plan.
Definitely.
It sounds like they're taking their international expansion seriously,
Uh-huh.
not just rushing in blindly.
Yeah.
But let's shift gears and talk about the Affirm card.
Okay.
It seems to be a real success story, attracting their most engaged and credit-worthy customers.
You can think of it as a VIP club for Affirm users.
Okay.
They're seeing high engagement and strong economics with the card, and they're constantly working to make it even more versatile, expanding its use beyond traditional buy now, pay later purchases.
It's like they're aiming to become an integral part of their customers' financial lives.
Yeah, I think that's a good way to put it.
But how are they leveraging AI in all of this? I know Max Levchin hinted at some exciting developments during the earnings call.
What's fascinating is that they're using AI not just for the usual things like fraud detection and underwriting,
Right.
but also to boost their internal productivity.
So they're using AI to work smarter, not harder.
Exactly.
It's probably a key factor in their impressive operating leverage targets.
Right. They're finding ways to grow efficiently without a massive increase in headcount. It's a strategic use of technology that's paying off.
Okay, so we've covered a lot of ground here.
We have.
Strong growth, smart risk management, savvy partnerships, international expansion, and a forward-thinking approach to AI. It seemed like Affirm is firing on all cylinders.
It's impressive to see how they're navigating the current economic landscape while staying true to their core values of transparency and responsible lending. They're definitely a company to watch.
Before we move on to a deeper analysis of their credit performance,
Okay.
let's take a quick look at some listener questions and comments. Keep them coming. We'll be back in a flash to delve into the nitty-gritty of Affirm's credit metrics.
All right, so let's delve into Affirm's credit performance, which is a critical aspect of their business model. One thing that stands out is the improvement in delinquency rates, particularly in December. That's a positive sign, especially considering the current economic headwinds.
Definitely. Delinquency rates are a key indicator of credit risk. So seeing those numbers improve suggests that Affirm's borrowers are managing their debt well, even amidst economic uncertainty.
Right.
It speaks volumes about their underwriting practices and their ability to assess creditworthiness accurately.
Exactly. It's not just about approving loans. It's about approving the right loans to borrowers who can manage them responsibly.
Right.
But I know some listeners are wondering about Affirm's plans to potentially increase risk exposure.
Yeah, that's a great question. It seems like they're walking a tightrope.
Yeah.
Trying to balance growth with responsible lending. What's their approach to managing that delicate balance?
Well, they're definitely not throwing caution to the wind while they're exploring ways to cautiously expand access to credit.
Right.
They're doing so with a laser focus on credit quality. They've emphasized repeatedly that credit quality is their top priority and won't sacrifice it for the sake of growth. It's about sustainable growth, not reckless expansion.
That's reassuring. They're not just chasing numbers.
Right.
They're building a business for the long haul.
Absolutely.
But how do they determine how much risk to take on?
Yeah.
What are their benchmarks for making those crucial decisions?
Well, their relationships with their capital partners are paramount.
Okay.
These are the institutions that provide the funding for Affirm's loans.
Right.
They have specific expectations for yield and delinquency rates.
Right.
And Affirm needs to meet those expectations
Right.
to maintain those vital funding relationships. It's a partnership based on trust and mutual understanding of risk tolerance.
So it's not just about what Affirm thinks is acceptable risk.
Right.
But also what their capital partners are comfortable with. They need to find that sweet spot where they can expand access to credit responsibly while keeping their capital partners happy and confident in their ability to manage risk.
Precisely. It's a constant dance,
Yeah.
a delicate balancing act. They're continually in conversation with their partners,
Okay.
fine-tuning their credit models and risk thresholds to ensure everyone is on the same page. It's a collaborative approach to managing risk and ensuring sustainable growth.
That makes sense. It's like a carefully choreographed performance.
Yeah.
Where everyone needs to be in sync to create a successful outcome.
Mm.
So far, it seems like they're hitting all the right notes.
They are indeed. Their track record on credit performance speaks for itself. But let's zoom out and look at the bigger picture for a moment.
Okay.
Where does Affirm fit into the ever-evolving landscape of financial services?
Yeah.
They seem to be challenging the traditional banking model.
You're right. They're like the disruptors.
Yeah.
Offering transparent, flexible, and consumer-friendly financial products. No more hidden fees, confusing terms, or endless paperwork.
Right.
They're cutting through the noise and simplifying the borrowing experience.
It's a refreshing change, and it's resonating with consumers,
Yeah.
especially younger generations who are accustomed to seamless digital experiences. They expect things to be quick, easy, and transparent.
Right.
Affirm delivers on all those fronts.
Their app and online platform are incredibly user-friendly, and their approval process is fast and efficient, a stark contrast to the often cumbersome processes of traditional banks.
Absolutely.
It's like they've taken the best aspects of the tech world
Right.
and applied them to financial services.
And they're not just streamlining the process.
Yeah.
They're also expanding access to financial services through their alternative credit scoring models.
Right.
They're reaching borrowers who might be overlooked by traditional lenders,
Okay.
promoting financial inclusion in a meaningful way.
It's a powerful combination.
Yeah.
Disruption, innovation, and inclusivity. It's no wonder they're making waves in the financial industry. So where do you see Affirm going from here?
Yeah.
What does the future hold for them?
I believe they're well positioned for continued growth,
Okay.
both domestically and internationally. They've barely scratched the surface of the international market, and their partnership with Shopify is a major step in the right direction.
I agree. The international opportunity is massive, and they have a solid foundation to build upon.
They do.
A proven business model, a growing customer base,
Yep.
a robust funding network, and a talented team.
And let's not forget their relentless commitment to innovation.
Yeah.
They're not afraid to push the boundaries and experiment with new technologies and approaches, Who knows what they'll come up with next? That's what makes them so exciting to watch.
They're not just playing the game, they're changing the rules. Right. But before we get too carried away with their future prospects, let's have some fun with our This Is Not Financial Advice segment.
Ah, yes, the moment where we unleash our inner Wall Street mavericks and pitch a wildly outrageous, yet strangely plausible trade idea.
Exactly.
What have you got for us today?
All right, drum roll, please.
Yeah.
What if Affirm partners with a major grocery chain?
Yeah.
Like, say, Kroger.
All right.
Imagine being able to use your Affirm card at Kroger and get those sweet 0% APR offers or even discounts on everyday essentials.
Now that's an interesting idea. It could be a game changer for both Affirm and Kroger.
Right.
Groceries are an essential expense, something everyone needs. Regardless of economic conditions, offering attractive financing options could be a major draw for price-conscious shoppers.
Exactly. And it aligns perfectly with Affirm's mission of promoting responsible spending. Instead of racking up credit card debt on groceries, consumers could use Affirm to manage their budgets and avoid those pesky interest charges.
It's a win-win for everyone involved.
Right.
Affirm gets access to a massive customer base and a steady stream of transactions.
Yeah.
Kroger boosts customer loyalty and spending.
Right.
And consumers get to stretch their budgets further.
It's bold, it's innovative, and it has the potential to shake up the grocery industry. Of course, this is all hypothetical.
Of course.
We're not financial advisors.
Definitely not. But it's always fun to explore these what-if scenarios and let our imaginations run wild. It's a good reminder that anything is possible in the ever-evolving world of finance and technology.
All right, so we've covered a lot of ground in this deep dive. We've analyzed Affirm's financial performance.
We have.
Their credit risk management, their international expansion plans, and even their potential to disrupt the grocery industry.
It's been a good one.
But what are your key takeaways from all of this?
Yeah.
What should our listeners be thinking about?
For me, it's their ability to balance aggressive growth with responsible lending. They're not just chasing numbers, they're building a sustainable business model that puts the consumer first. And their commitment to innovation and technological advancement is truly impressive. They're not afraid to challenge the status quo and push the boundaries of what's possible in financial services.
I completely agree. They're a company that walks the walk and talks the talk. They're not just about profits.
Right.
They're about creating a more inclusive and accessible financial ecosystem. And that's something worth paying attention to.
Absolutely. So, dear listener, whether you're a potential investor, a merchant considering a partnership, or simply someone interested in the future of finance, Affirm is a company worth keeping on your radar.
They're proving that you can do well by doing good. And on that note, we'll leave you with one final thought to ponder.
What other industries could benefit from Affirm's approach to honest and transparent financial products?
The possibilities are endless. The healthcare industry immediately comes to mind. With rising healthcare costs, offering flexible payment options could be a game changer for patients struggling to afford treatments or manage unexpected medical expenses.
Absolutely. Imagine using Affirm to finance elective procedures or even spread out the cost of routine checkups and medications. It could alleviate a lot of financial stress for patients and potentially improve access to quality health care for those who might otherwise delay or forego necessary treatments.
It's a compelling thought.
Right.
And what about education? College tuition is astronomically high these days, putting a strain on students and families. Could Affirm's model help make education more attainable and affordable?
It's certainly an interesting possibility. Think about using Affirm to finance coding boot camps, online courses, or even traditional college tuition. It could empower individuals to invest in their education and acquire the skills they need to advance their careers without incurring mountains of debt.
It's an intriguing concept. Affirm's model has the potential to disrupt multiple industries, not just retail and e-commerce.
Yeah.
It's about providing people with more financial flexibility and control.
Right.
Empowering them to make informed decisions about their spending and investments.
That's what makes this deep dive so fascinating. It's not just about dissecting a company's earnings report. It's about exploring the broader implications of their approach and vision and how it could potentially reshape entire industries.
So, dear listeners, we encourage you to keep thinking about the potential of Affirm and how their model could be applied to solve real-world problems and create a more inclusive and equitable financial system. Keep those questions and comments coming. We love hearing your thoughts and insights.
And as always, remember that this is not financial advice. It's simply a conversation.
Right.
A deep dive into a company that's making waves and challenging the status quo.
It's food for thought, inspiration for innovation, and a reminder that the future of finance is brimming with possibilities.
Thank you for joining us on this exciting journey into the world of Affirm.
Until next time, keep exploring, keep questioning, and keep investing in your knowledge.